All right, looks like we're live. This is Max Gagliardi, and we're doing something new here. I've got David Heikkinen with me. I think we're going to call this show Talk.Energy Insights. And basically, I guess a recap show or a topical show where we're going to go through the markets, where things are at, and then hit on some different news and some different headlines that we want to discuss. But before we get into some of that, David, why don't you introduce yourself?
Yeah, thanks, Max. And so Max and I sat down a couple weeks ago and recorded a podcast and just had good flow. And so that'll come out in about a month. But as we were thinking through where his private background is and our public markets perspective, so Heikkinen Energy Advisors is a energy equity research boutique that covers really legacy oil and gas, and we're moving into the energy transition and renewables as well. But we just had kind of a broad-ranging conversation, and as we thought about it, like every week we could sit down and commit to 10 to 30 minutes of time just thinking about what's happening and kind of go through things. As we went through it, I thought first things first, it's always useful as we're recording these to kind of peg to where we are in reality if someone happens upon this at some point in the future. So the S&P is right above 4,200. We've got Bitcoin trading around 37.5. On the markets as a whole, commodities, oil's at 70.44, natural gas is 326 on the prompt. We got 458 for copper. And I do think people ought to start looking at this Barclays carbon index, and there's a ticker GRN to get an idea of the future market for the commodities. I think will be carbon, and it's something that I'm sure we'll talk about in the coming months. But as Max and I were catching up, we just see this view of real economic recovery globally with limited spare capacity, and just how does the industry react to, oil? I think oil can go to 90, and I think you could see it, as fast as the fall. And I think gas kind of stabilizes in this, 3 to 350 range. And for the upstream companies that I've been focusing on for a long time, like their free cash yields, their commitment to lack of growth, and really just kind of the U.S. markets, we're down a couple million barrels of oil a day into a demand recovery. Sure seems like we've got this setup of an industry that's going to just be more disciplined. And so I thought we'd just sit down and kind of talk about, like, how's Max see things? Like, what does that mean from the midstream company standpoint? We can talk a little back and forth on, the public upstreams, and then I think the other factor that's the wild card is going to be the Permian independents that are private,
Right.
both on the gas and the oil side. So
Yeah, real quick, just to hit on those prices before we launch into some of the I guess start the commentary in my mind around oil back above $70 and gas back above $3, and it's an interesting place to be given where we've gone through the last year, and you're hearing, I'm seeing more strength, and you probably follow the fundamentals a little more than I do, but it's exciting. What's your thoughts on where this can run to? We'll talk about oil first. I think nat gas has maybe got more of a range-bound element to it, but what's your thoughts on oil? We've ripped up pretty quickly here.
I think the key thing on oil, and it's really a strategic change, which is North American oil producers are in a model which is living within cash flows and returning that cash to shareholders. And so you've got the majority of the Permian companies, which is where the oil growth has come from, really committing to 0 to 5% growth. And until there's a global call for any growth, they're not going to do that. And so the interesting thing is, you think about, what the Saudis and Russians really did with the price collapse. We've lived through that pain. Balance sheets are being improved, and there is this hard commitment, and actually even contracted variable dividend model that has come out that is just going to change the profile of how you should think about the total returns for the upstream space. And there's never been a total shareholder return component for the independent U.S. companies or Canadian companies that included dividends and variable dividends. It's always been there for the integrated companies, but I think that shift is dramatic. And with that, we won't see a big surge in activity from the public companies. And with that, all we need, and I think everybody wants to go on vacation. I think there's an increase in travel. Got to watch the variance in the developing world from a demand standpoint, but I I see this path to oil, approaching 90. And this is my own personal opinion, not the opinion of Heikkinen Energy Advisors.
Sure.
But we've reflected what happens if oil just sustains 70 in the long term, and these companies are trading at 2 to 3 times multiples, particularly in the small mid cap space where a lot of them have been kind of orphaned. But even in the larger side, cash margins just expand so quickly, and there's discipline. And so that's where I think the rub's going to be. Is I'm curious how you think about the midstream side. I hit the Permian can grow, Appalachia can't grow, Oklahoma continues to decline. Williston is essentially a flat to declining basin. Incremental gas recovery. But what do you think happens, kind of on the midstream side of the business?
I don't know. Midstream's tough with not a lot of growth. It can be challenging. I think if you look at natural gas at above $3 or some sustained $3 to $3.50, like you mentioned earlier, I think you'll see some gas volume growth in some of these plays. Certainly the gas, some of the gassier plays or the dry gas plays. And that, so there could be something there. I think if you're looking at the private midstream side, I think that a lot of these other basins, the legacy public guys are kind of set up for harvest mode. They've got large, wide, operations that spread across the basins, and they're going to, a lot of these guys have the bigger companies dedicated. So, whereas the private guys were kind of tied their wagon to the mid-sized and small-sized producers. So I think that and I'm not a public midstream equities guy, but I think that you'll see the big guys that have the good footprints probably continue to get some volume. Obviously, the Permian will be, and then maybe these dry gas plays will be where you see the majority of it. But to your point earlier, where you've got either flat to declining volume in most of these other basins, I think it's going to be a challenge on the midstream side, just to be honest.
I mean, really, that kind of fits into what's happening in the upstream side. I've been in the oil and gas business since the early 90s when I worked at Shell and then became an analyst in 2000. And coming out of the $10 a barrel 98, you saw a lot of consolidation. Like the 97 to 2002 timeframe, you had companies like Cross Timbers that became XTO that kind of had this 10% organic growth and 10% acquisition growth, and then you started seeing big mergers. That's when Devon did their deals. Chesapeake was out buying a bunch of stuff. It sure feels like we've got that same trend happening in the upstream space now, and should happen in the midstream space too, where the Williston's being consolidated by a couple players. That DJ Basin in Colorado, you've basically got Chevron and Oxy that probably don't care a whole lot about the assets via their Noble and Anadarko acquisitions. And then really, 2 independents, going to vie for who else can buy the rest of Weld County. Eagle Ford's consolidated, Haynesville's being consolidated, Appalachia, EQT is kind of hell-bent on dominating Appalachia. As you get 2 or a couple companies, like the operation efficiency improves, but sure seems like the midstream guys would need to consolidate GP&T and get some growth through acquisitions. Do you think the larger guys try to consolidate and kind of do that same strategy that we're seeing in the upstream space, or do they not?
You would think so. I mean, you would think so. And you look at ETC and this Enable deal. Mm-hmm. That's consolidation there, and that's one. I think there will be some. You've seen some guys get into buying things like storage assets or marketing assets. I think Williams made a marketing acquisition recently. So I think you look at Enbridge with the Cushing Blue Knight assets. I mean, people are going to buy things strategically that fit with whatever, some guys focus on NGLs, other guys maybe focused on residue. I don't know where the, get close to the wellhead consolidation fits in. I just think that that's a little bit of the bigger guys, like, for example, the ETC Enable deal. I think it's the downstream assets, the old CenterPoint assets that are probably driving that. I don't think that ETC cares at all about the processing plants. Maybe they do because of the control that it gives them. But if you look at what they did, with the SimGas deal, they're not doing anything with those assets. I mean, they're very, very little TLC going into stuff that's close to the wellhead. It's sort of, and so then you think, okay, well, maybe they would spin those off and sell those. But the problem is they're given good cash flow, but they're declining assets and they're getting rewarded with a high multiple for those in the marketplace. And so why would they sell something for a 6 when the market's going to reward them for much higher? And so long-winded way of saying I don't know. I think there should be consolidation, but I think it'll be more of these strategic kind of downstream assets that add this longer play strategic element to them. I don't know that they're going to gobble up a bunch of G&P. Maybe they will. I think it'll probably be more of the private guys smash going together and trying to, survive for another day.
No, we're seeing that in the, with the double point, Pioneer deal, where a private company that grew a ton. You could say even the same thing with Southwestern and Indigo. You had a private company growing a ton. It's really the same thing on, now we're seeing, consolidation of the Permian. I think it's Colgate just bought some assets from Oxy. They seem to be almost playing the double point game of, build this up. Pioneer would love to buy Endeavor someday in the Midland Basin. It's just a question of when or if valuations and personalities fit. But it's a business that as it consolidates, you just get better cash flow, margin expansion. And I think the thing that people miss is at $50 oil, to $70 oil, you're almost doubling the cash margin per barrel equivalent for a lot of these companies. The other thing that people miss is most of the U.S. companies aren't really that oily. I was looking at it the other day. An oily company is 55% oil. Like there's only a few, that are kind of more Williston focused. You got the enhanced oil recovery companies and some Gulf of Mexico companies that are north of 70% oil. But there's a whole lot of gas and NGLs out there, and that's where I think things are going to get interesting. And the ethane prices recovering are sure going to help the midstream companies. And we actually upgraded one of them today, DCP, trying to find an angle to play that. Michael Cusimano did that. So I think there's some opportunities, kind of play across the spectrum, which actually fit into something your last update from Miami, and opportunities that go across the spectrum. And when we caught up, we talked a little bit about Bitcoin and crypto more broadly. Personally, I'm curious your takeaways and some of your thoughts on some of the Bitcoin mining of flared gas and scale and size and what you learned in Miami. You kind of intrigued me around what you're thinking there and where things can go.
Yeah, I think the Bitcoin in the intersection with oil and gas or energy it's really a fascinating thing that the last 6 months I focused a bunch on. I haven't done a lot on it. I think I'm going to do like a Talk.Energy Direct or something next week where I kind of deep dive into it, but I'll give you my high level thoughts. And I think that it is, number one, the highest value use case for natural gas. So I know a lot of companies, I think you'd be surprised, or maybe you wouldn't, that there are a lot of the larger E&P companies that are doing pilot cases primarily around natural gas or flared gas with Bitcoin mining. But I think over time, what you're going to see is that, people at these companies are fiduciaries. And if you have a way to get, when it was at its high watermark, the price side, and it was over 1,000% higher than Henry Hub. Now there's a bunch of CapEx that goes into to getting that, to extracting that value. So it's not like it's just you flip a switch and you can convert it to Bitcoin. But it is the highest value use case for natural gas. It is the first time in human history that we can take demand and put it anywhere. So I think the energy game, and in my background specifically around energy marketing and midstream, and everything about energy is really this transport of this proxy game, right? It's like, how do I get it from where I'm producing it to where it needs to be? And when that paradigm is shifted with Bitcoin mining, it was just really just messed with me. I was thinking, I had to think through it a lot. I was like, this is a weird thing to have to assimilate into my worldview. And so it's been, for me, it was a journey around, number one, just learning about Bitcoin. And that took, 2-3 months to really get to a place where I felt comfortable just understanding it. And then once I got to that point, it was eye-opening from just totally other perspectives other than how it impacts the energy industry. I just had not ever taken the time to do the diligence. And then once I did, and then I started going down the mining rabbit hole, and the mining is really fascinating because it reminds me a lot of E&P and drilling. There's a bunch of levers, and it's CapEx heavy, and you can't control the price, and it's even more volatile. So it's been a fascinating, deep dive that I've done. But I think that over time, what you're going to see is that there's a lot of disadvantaged natural gas, and not just flared gas, but you've got legacy gas fields. You've got fields that are high midstream fees, but that may not have long-term dedications. So, for example, you might have a gas field out somewhere that's a tier 2, tier 3. It's in its terminal decline, low decline gas fields, and they're getting hit with a lot of midstream fees. And you can look at repurposing some of these assets into these kind of off-grid mining complexes. And I think that this is something that is that's going to be a trend. And I think it could pick up rapidly. And when you went to Miami, like I wasn't the only oil and gas guy there. There was a number of people in the industry, and there was investors. There were some high, big name people there that were very interested in this. And so I think it's going to be something that continues to pick up. And I could probably talk for an hour on it, so I'll cut it off there. But what are your questions and thoughts on it?
This is my COVID hobby. If you had me do a TED talk on something I learned through the COVID era, it'd probably be around crypto and kind of how you think through distributed ledgers. And essentially, as part of the main reason why my business, which has been a broker dealer, we actually are getting out of the brokerage side, because I think anything that is a transaction at some point goes to zero value and moves onto some distributed ledger. And we're moving into more of a subscription-based business, because I just think those real estate transactions, stock transactions, there's just a whole way to T plus 3 days should go to T plus 3 seconds if things go the right way. And it's a disruptive technology, and I know there's a whole lot of discussion around the proof of work concept and the amount of power that takes. But you start pairing off-grid solar, wind, and natural gas into mines. It just seems to make sense. It's just a question of scale, a question of how do you just some of the stuff I did. We looked at some assets in Texas at one point on the private side, but there's humidity becomes a problem on trying to keep computers cold and your mind cold. Like it works well in the Rockies and places that are dry.
Yeah.
It's kind of an interesting outcome, but like the reality of it is like you just have this store of energy, and like if you have power that doesn't have anywhere to go on the renewable side and on the gas side, a lot of off-grid work is being done in the upstream space already of trying to electrify oil fields. I mean, I'm hearing commentary of electrifying their fleet vehicles that I think is freaking cool. Like, imagine the oil and gas space being the first place that you see a bunch of. I've got a Rivian pickup truck on order right back here, personally.
There you go.
But the F-150 Lightning, like, imagine if the oil and gas business becomes the EV fleet vehicle and lowers scope 1 and 2 and even 3 emissions, and then goes off grid with power generation coupled with solar and wind. You got a bunch of wind farms right outside where you live that have a lot of natural gas fields associated with them. If you're trying to figure out a way to get reliable power generation, then you tie a little bit of carbon sequestration and carbon capture, which is something the oil and gas business is known for a long time, and just kind of embrace this change. And the mining side of it, just haven't seen anything of real size. Like, it seems like the volumes are relatively low at this point. What do you have an idea of how much gas you can actually put into it? Like, how much flared gas can you capture? Is it millions of cubic feet a day? It's not hundreds of millions, I know that much.
Well, I mean, it could get pretty big. I mean, like, so for example, if you had it's really the ASICs that are the regulator, right? I mean, like, and if you look at what a lot of guys are doing, it's kind of in the couple hundred MCF to maybe a million cubic feet if it was a relatively
for
large.
Everybody that isn't a Bitcoin, what's an ASIC?
So these are the machines that actually do the mining.
Right.
So
the chips, exactly.
Right, that do the hash rate and that solve for the blocks. And so you have to have a certain type of chip, and these are hard to find, and there are groups that have them. And I think what you're seeing is that there's opportunities for people that are in areas like, for example, China, or that want to get out of that country, or even the guys that are the on-grid public guys. You could do it cheaper, I think, off-grid. I think you could do it cleaner off-grid. And I think that if you could get your hands on enough of the miners, I think you could do large-scale deployments. I think that's probably the regulator. And there's some things you got to solve for on the power side, like what's the most efficient way to do that. There's a number of different ways you can do it. You can rent generators, you can do turbines, you can do renewables if you want, if it makes sense. You can do a lot of different things, but for example, there's people, we're hearing rumors of, large scale, movements of people wanting to do large scale hosting. So call it, 100 megawatt chunks or more. And for that, that's 20 million a day for a 100 megawatt deployment. And so I think that you could see maybe some of these large natural gas PDP companies that are out there, repurposing parts of their portfolio, like a mix, right? To where you have like, hey, I've got this gas field producing 500 million a day. I'm going to take 100 million a day of that. I'm going to spool up, a half a gigawatt, and then I'm going to sell that power. And it may be, I think Bitcoin mining is probably the highest value use case right now. But even like these data centers, right?
Web
you look
services.
There's
still located off grid, totally.
Right, exactly. So there's a lot of interesting things there. It could be a whole topic. It's really forced me to get into the power side and understand all the conversions and things and what really drives the kind of megawatt cost or cents per kilowatt hour, however you want to look at it. But it's not that. It's all widgets, right? It's like, or it's all heat or energy value. So it hasn't been too hard, but it's been an interesting thing to dive into.
Yeah, I'll send you a couple of links on some free books to read around technology, energy, and mobility. It all is converging together, and I just think that when you brought up Bitcoin and a bunch of oil and gas guys there, I think that the convergence of that as well isn't something that people are expecting. And so, yeah, it's going to be a fun time. I'll be curious to see how we bring this thing together on a weekly basis. I think kind of covered the bases, and hopefully we'll talk in a month and 2 months, and oil will be getting close to 90. So I can say I was right back in June on our first one of these.
There you go.
That's my fingers crossed moment.
Make some predictions on it.
Exactly.
Yeah. Well, no, this is fun, and I think 30 minutes to an hour, anywhere from 10 to 30 minutes. I think it's good to just hit the high points. And we'll see whether we're right or whether we're off the mark in terms of some of these things, like prediction wise. But I do think, like, with just the, whether you want to call it inflation, whatever you want to call it, but pent up demand or whatever's driving it, I think that we're going to a sustained, stronger commodity price environment. I don't know. I'm not going to predict like you did where it goes. I think it could go higher than 90 potentially. It depends on what OPEC does, right? But I don't know.
View of a peak is probably in the 150 range. Not trying to be too outlandish, but you look at the lack of capital investment globally. I was going through, like, global deep water exploration is essentially Guyana and Suriname at this point. It's not much in the Gulf of Mexico. You think about a U.S. business that has been the swing producer. The call on spare capacity for OPEC Plus is going to be relatively tough, and beyond Saudi Arabia. And, you saw Iran barrels coming back to market. They're already being sold, was my opinion, in the black market. But the reality is those barrels came on and oil didn't flinch, which just tells me that there's a better demand cycle out there. And, we could get into copper and lithium and all that down the road
let's do that next time.
We'll have some stuff out around that global supply, but pulling up the IEA report of 9-fold increases in lithium demand to make the 2030 targets. That's going to be a tough knot in my backyard moment of who actually controls the amount of lithium mines and lithium midstream. So
I think I think that's a really interesting one. We talk about it next time, but just the supply chain in general around the transition, it's very, how realistic are some of these goals and what's that going to mean for pricing and who's going to source it and all that stuff. But real quick on oil, I mean, it just seems like back in 2018, I remember saying, I try to look at problems and break them down to like the most simple variable that I can, and just like, okay, can I boil this down to like a single variable? And I remember the real variable in my mind was just capital. And it was just like looking at it even in 18 and looking at capital and saying, man, this is really, it really just, you saw a lot of predictions around continual weakness in pricing. And I just felt like, well, yeah, sure, you can predict a future where it continues to trend down or, be weak in price. But I just saw the flight of capital. And then in 19, I saw the flight of capital. And then 2020 was the perfect storm. And then now with the energy transition narrative being pushed, it just seems like you got to have meaningful capital, especially in the U.S. and even globally with the mega projects. It just seems very bullish, the oil for me.
I mean, I'll share my clandestine view of like oil going up as much as I just said actually encourages the energy transition to happen faster. And so, our starving of capital from, there's a thought process of who are the investors in BlackRock that encourage the move on the ESG side to limit the amount of capital the U.S. companies actually deployed. I know it's a question of like where were their LPs and what was their motivation, and it's not just endowments; it's sovereign wealth money. It's like there's a whole lot of interconnectedness of these markets, and I think that's what's going to be so amazing as we look at the next 10 years. Is we see, 5-fold annual investments in the energy transition as we saw on an annual basis globally in oil and gas. Like the wave of people worry about the capital destroyed in the oil and gas space for shale, 1.0, 2.0, and now we're in 3.0. Like we could dwarf the capital destruction in the renewables and the energy transition if things don't go the right way for each individual market. And there's a lot of stuff we'll get to talk about. And the center of it's always going to be energy. And you hit it. It's either, it doesn't have to be hydrocarbons. It's just hydrocarbons are a very effective way to store the sun's energy over millions of years. And so
we'll get into it. I don't know that we see eye to eye on all the transition stuff, which I think will be fun. I think when we talked about this show, you were wanting to be like taking opposite sides of things, and I was like, I think we can. I think there's some things we can talk about. My thing is that I try to distinguish back to the capital thing around what is capitalism, and it's kind of a philosophical thing for me. Is it a consumer driven thing or is it a capital markets driven thing? I think the answer is it's both, but I think some people get into this mindset of, well, if we just put enough money or throw enough money at something, that's capitalism. The markets have decided, and it's like, well, the consumer has to decide too. So it's going to be interesting to see how it plays out. I definitely think in the near term to medium term, I think you're going to have higher commodity prices because of this push, and then we'll see what the consumers do, and we'll see what the capital markets do from there. But things are changing.
Gets into Taleb's definition of fragile and anti-fragile, and the more federal and control that you put on a system, which is what we're getting in the energy transition. We're getting external controls that are not necessarily individually driven, and those systems tend to be fragile and tend to have surprises to the upside and downside because you try to have stability, and I think that's why we had the 2008 financial crisis, and I think that there's a definite path forward that says, people try to fight the last war, but whenever you talk about 10-year storms and 100-year storms, you always forget that last 100-year storm was worse than the one that you modeled. And I think that's the factor of variability, and you call them black swans or whatever. But the reality is things are going to break to the upside and the downside bigger than what history would dictate, given the amount of change that we're trying to make in how we actually power the global economies. And that this is not a normal transition. And I think you've said it, that energy's been in transition forever, like from horses to kerosene to oil to natural gas to nuclear, and now into solar and wind. Yeah, this one is as big as anything anyone has ever lived through, and we're trying to do it really, really quickly globally.
Right. So, and we're trying to do it top down too, right? I mean, and I don't want to go. Yeah, I don't want to go too much into this because we can go. Top down is
the problem. Like when you go top down with one structure, it's the definition of a fragile system. Yeah. When you have big mandates coming from the top as opposed to 1,000 independent decisions driving it, that randomness of 1,000 decisions, and the entrepreneurs like you and me, like we all are out there to fail. It's when you have big systems that are making decisions, you tend to see fragility and dramatic good and bad things tend to happen, which is what's as a person living and being able to, for my life, I get to study whatever I'm interested in. This is as interesting a question as anything I've ever seen. So it's going to be fun,
It's
and I
fun.
look forward to talking to you about it. It's been good meeting you. And maybe we can get somebody on some other time that's smarter than both of us as we go forward. So.
I think we can throw in up to like as many people as we want, or as many as we would want to do on this. So I think let's end it there, and that leaves it kind of with a plenty to talk about in the weeks to come. But Heik, I appreciate you getting on and doing this, and I'll try to upload it to I think it's been live. I think we're on a couple platforms, and so it should be saved there. Then I'll try to get it onto the Buzzsprout, which will push it out to to all the audio platforms as well. But anyways, have a good weekend, and we'll talk to you soon.
Be well.
All right, see ya.